Hello everyone, and welcome back to our channel. This is Chris from definedriskinvesting.com, and today we're going to take a look at a company that's of interest to us called UPSTART.com. Before I begin, let me give you a little disclaimer. This video is being done for educational purposes only. I am not an investment advisor, and nothing contained in this video should be construed as investment advice. Investments do involve risk, and you can lose money and probably will lose money if you don't know what you're doing. So as I stated, this video is going to be about a company called Upstart.com. It's a company I've been following for quite some time. And what Upstart is, it's an AI, artificial intelligence lending platform that partners with banks and credit unions to provide consumer loans using non-traditional variables such as education and employment to predict creditworthiness. Okay, so Upstart does not actually lend their own money. It's a go-between between the consumer and the bank. The consumer goes to the Upstart .com website, they choose the type of loan they want, and they enter some variables. And then using a proprietary software that is based on artificial intelligence, Upstart then matches that consumer with a loan from one of its partner banks that it's working with. The banks love it because using this proprietary method, they have reduced non-paying customers by up to 80%. And so it's really benefited them in that they don't have the defaults and delinquency that they had before. And in return for being this go-between, Upstart gets a referral fee back from the lending bank. And this thing has really grown. Currently, it's at $104. We'll take a look at the chart in a minute. Up 10.3, about almost 11% today. I'm recording this video on January 26th at around noon Central Time. If we take a look at the one-year chart of Upstart.com, we can see we started out here in the $60 range. And every time earnings were announced, we kind of laddered up on it. So earnings here, this is March of 21, consolidation dropping a little bit, next earnings announcement, same thing. But we're always hitting higher highs on the way up here, you can see. So then this is last summer, earnings announcement kind of went sideways. And then we had in August of 21 just absolutely a blowout earnings announcement. You can see how this thing went almost vertical. We had a little down draw here, but that was an overall market drawdown, not anything particular to the stock. And we can see here we ultimately went up to reach a high of $390. Now, this company is earning a lot of money. It's not profitable yet, okay? In fact, the PE ratio based on today's prices is 105, okay? So, stocks in this range, this could go for 20. So at the moment it is overvalued. It's a highly speculative stock, but one that I think deserves our attention. You can see here, it reached a peak back in October of 21 of almost $400. In fact, it did get up to $400 here after blowout earnings, okay? Well, what happened at this time period is, this is the time period where the Federal Reserve came out and announced that they were going to suspend their future bailout of the bond and stock market, and in all likelihood, we're going to begin raising interest rates. Well, growth stocks like this are very susceptible to any decrease in the 10-year bond rate. And so as the 10-year bond rate started to drop, so did the stock precipitously. Nothing fundamentally in the stock really changed. The only thing here, although in the past on earnings announcements the stock shot up, at this point the market was so vulnerable that any miss or rough guidance was just going to propel it. And so it wasn't so much the stock that was disappointing, but the overall market's transition from growth stocks into value stocks drove this thing down to where it is today. It had got down into low 80s last week, and it's making a little bit of a rebound here. I think this drawdown is significantly overdrawn. It may be a little bit early to enter the stock because we don't know over the next, say, month to 3 months what the market, if this market is going to stabilize. It's been a very wobbly market, but I wanted you guys to be aware of the stock and to put it on your radar now. As you can see, here's a 3-month chart. You can just see how it's been going down. I want this thing to be on your radar. I would say next week or the week after, if this thing stabilizes in the $100 range, it may be a good time to start nibbling on some positions. I wouldn't go too heavy on it, but maybe take a 1% to 2% of your portfolio, buy some call options or some put debit spreads on this thing, or put credit spreads rather on this thing, and just slowly nibble our way into it, because I think if this market does recover the way I'm thinking it may, this stock could provide you with some tremendous opportunities for a good rebound. As I said, we're trading now back in the low $100 range. I really think this stock should be valued anywhere from $150 to $250 somewhere if it continues to on the pace that it has been. The other reason I think you guys should be interested in this is there are some catalysts coming up in the near future. They are actively soliciting more banks and savings and loans and announcing new partnerships all the time. So as they get more partners, they'll be able to originate more loans because they'll have more options to place their customers with the different lending institutions. Remember, they're not actually lending out the money. They're the go-between between the bank and the consumer. But because of their proprietary artificial intelligence software, they're able to charge a premium for originating those loans. If we take a look at an example put spread here for February 4th, which at this point is approximately 10 days away, if you bought the 100 and sold the 105, that would bring you a total credit of $233. If you went out 2 weeks, probably wouldn't be worth it. I would go with the 4th. This stock carries a lot of option premium. Let's just look what an at-the-money call goes for. I'm going to remove these puts for a minute. We're trading around 105. You can see in a 10-day 105 call right now is selling for, or you could sell it for $750. So that's our overview of UPSTART.com. If you guys wouldn't mind liking this video, place any comments below. And if you'd be so kind as to subscribe to the channel, we'd really appreciate it. So this is Chris from DefinedRiskInvesting.com with the company overview of UPSTART.com. Thanks for watching.